is it now? Where can it go based off Fibonacci levels, order blocks, fair value gaps, time of day, and liquidity grabs, seeing where price can be pushed to from the best, most optimal point of entry. So with that being said, I'm gonna go ahead and change the scene and get into the charts. So right here I have NAS100 up. Sorry guys, I got a crick in my neck. Um, and from this last week, you can see how bullish price has been. Look how bullish it took this candle out, made a high. Essentially, it barely took the high out. What that could mean is it has momentum upwards. We see this. Now we have to be anticipating pullbacks of any nature, but once there's a green candle, it's going to be bullish for another week or two or a week. That's just how the nature of these things work. Sorry guys. See me kind of doing my thing. It's because I work out and I got a really tight neck from sleeping on my arm like this, so just been trying to stretch that out. Um, so okay, so I uh, I recently, this is the month. You see how it's been moving on the month. Let's go down to the week. So I already moved previous week's low and high to this current week that just finished. So this is the current week that just finished. So I'm moving it over, getting ready for my preparing for next week. So I moved it over, and you can see that the weekly high is actually right here, and the weekly low is this point right here. So there's this move that happened, guys. This move that happened, it took all these levels out. You can see how it was being bullish. It took these levels out right here. Now, if we move over, we can see, well, where can price go now? What are the big figure levels? It just took out 12,800. Let's mark up 13,000. And the next two levels, the 200 level, 13,200, okay. And then the 13,500 level, which is about right here. Um, okay, so we have this 13,500, and then we have this liquidity area, these highs right here that price can, it's gonna have a lot of like resistance, but as soon as it starts breaking higher, it's gonna be bullish. So what we're trying to anticipate is a pullback to go through it. Um, but the next big figure level above 13,500 is the 800 level. Um, Gotta be pinpoint precision with these guys. So okay, so now we have some areas where we can target. Up in these areas over here, we can see that there's this swing low, which is now a target, and then these swing lows, which can be a target later on. So let's look for, this is the daily chart, the last up candle before the down move. Okay, so we see an order block right here. Price is almost already into it. It's the last up candle before the down move. Okay, it's this candle right here. Last up candle before the down move. Um, and actually what we could do is probably refine that on the 4-hour chart. So let's look this way. We see right here, I'm gonna scrub this way. And actually, in fact, it is still the same candle on the 4-hour chart. So that's going to be a place where price is going to go to. We can see, I think, Monday, there's a possibility, we've been having these pullbacks. Okay, so this happened right off the bat. Hasn't, this is where that order block is, guys. There's the 13,200. I think it's very probable if the market open starts to push up, it may just come up above the 13,000 level, but if I think it's going to push the 13,200. just because it's in this order block range, and we can do half of that. You know, it'd be 13 between 13,300. So there's this pullback where it could come up, see how price reacts, what London does, and then try to catch the expansion up to 13,200. For then the bigger move down, I believe, guys, there's this move right here that needs to have a pullback. It's this impulse from this move to right here. So if it goes to 13,200, right now, just hypothesizing, just really dependent on um, where price is um, during New York. From there, I'm gonna start erasing some of these levels so none of you guys get confused. These are old levels, breaker blocks, order blocks. Okay, so if price comes up, does this thing, comes up to this level for a move down, since price is bullish, it may just come down to this level right here. And it's already taken this move right here already filled its fair value gap. So where can price now come down to? I think it could come down to this level right here. This is the 4 hour chart, but there's this breaker block area. So I or this breaker block area. So I think price may come down. Actually, I don't know, guys. Let's see. Price is bullish. It's bullish. Comes to a level. There needs to be a pullback. Where can I put the pullback? It's a continuation level, so it may just come down back up to the 38%. Take this low out maybe right here, so come down to the 50%, and then that'll be the move for the day. But then it'll want to rally, do its thing, and then start its move higher. Something like this. I don't know. Just it needs to go higher, right? So this is just hypothetical, but I do need thinking it has put needs to push a little higher. Let's go down to the 1 hour chart, see if we can see anything. These are a bunch of days, so just gonna okay, so previous day low, previous day high. I already moved them. So what I can do is keep the Asian session where they are. Um, these right here are going to be moved soon as the market opens to wherever it's going to be. This is the so this price is going to open here already. We can say that at least this is going to be the Asian session high. Or it could be the low. Depends on if it just kind of goes up, right? So we don't really know, guys. So I'm just going to kind of keep these right here for right now. And it's all dependent on how Asia moves, where I can move, and then the 12 a.m. open, where that is, move these. So from there, what we can be doing is looking for areas of interest for a bullish. Okay, so let's say price goes up, Asia, London. There's this impulse from, from here. Oh boy, from here to let's just say here. Where can price come back to? There's this whole area right here, last down candle for the move up, which lines up with the 70 to 79% fib level. This would be a good area of high confluence for the buy. If price is in at 13,200 in the morning and it's a little bit right here, there's gonna be sellers, and then as soon as it gets back up into here after the market opens, that's where I'm gonna be looking to target for a buy. But if price is going up and at the open it continues going up, this is where I'm going to be looking for the sell. Obviously, we want to have 50 pips risk. So this is a long position. We're going to be entering around right here, 250. We'll say it's close to 200. I just don't know though. 221 is our entry, and we're going to have a 50 pip stop. Essentially right at the 30. That's a good one because it's the 30% right here. I wouldn't need to wait for at least the 800 level right there. 50 pip stop is right there. That's really optimal, but from what this fib is showing, and this is might just it might not even go higher. It might stay in right here, like right here. So this would actually I think it has to come up. But if depending on where price goes, we'll draw a fib for the total impulse and see where price can react. So if price is up here, and we know the overall bullish market's bullish, um, we can catch a short. Then in that case, 50 pip stop for a continuation level of maybe like right here. Maybe tap into the previous day lows, weekly highs, maybe around in this area, 1 to 4. And then maybe take 2% off right here or 3% off Monday and just let the rest ride because it could come down and target this order block right here, this whole down move, which lines up to with the 70 and 79%. So just depends on how price moves, guys. Um, have some buys models. We have a buy model. We have a short model. So let's say 70, 100 pips we're risking. We'll have to do one lot. This might be Monday. So best 1 to 2 right there. That's 13,050 by the end of Monday. That seems plausible, guys, for a Monday. But let's say it goes to 1 to 3, which is 13,160, but 13,200 is right there. That's a 3.5 move, risking 100 pips. Um, I no, gotta be 50 because we can stack them. So this ends up being a 1 to almost 7 risk to reward. Bottom of the order block is a 1 to 4, one to almost 1 to 5. So 1 to 4 would be a good target, I think, for a buy. But remember, if you want to take it all off the table Monday, secure those pips. Just know it can move more, but if you're up 4%, you can take a loss every day of the week and still be break even. Um, so sometimes people, other traders, like to just secure them as they come. So this is the my weekly market analysis, 30-minute chart. Here we go. And this can actually get even more refined into this level right here. And where is this? Okay, I'm just gonna see something right here, guys. This was the thing right there. See, price may just range and come down during Asia, and then there might be a little rally for New York, London, and then it might have the pullback for um, New York, and this seems like it could play out right here for a move higher. Just depends on where price is, honestly, guys. Um, I'm gonna go back to 4 hour and see where. See, it just took this high out. For some reason, I feel like there needs to be a pullback. So depending on where price is in the morning, if price pulls back down, right here, I may be looking to buy, put the risk on, but it took this high out. So technically, I feel like there may be a pullback. If price starts to be bearish, there might be a pullback. Then in that case, coming in, if Asia comes ashore, London, there may be a pull. There may be, if price starts to come down, and then for New York, there's the rally up. It might have the rally come into this new breaker bearish order block, and then the entry is going to be right here for the short to come down and to fill maybe the 12,500. So if that's the case, this is going to be something along our entry. We're going to erase this fib. Oh no. Okay. And if that's the case, we'll see how, this is the high, it creates the low. We'll say like right here, where can the short be? We could then target, how price moves. It comes down, it'll come up, want to retrace into this order block, 70%. Could be targeting right here then, if that's the case, close to 1950, 13,000's up there. It may target the 13,000, take liquidity, just depending on where price is. We have to just be mindful of that. But wherever that is, we're risking 1% max a day. So, and then this can come in, I'm thinking it at best take 2% off right here. It's 3.3%. let the rest ride to 13,500. Just let it ride. Take 2% off on Monday, whatever it does. You're securing those 2%. So guys, these are just hypothetical situations. This is Martin day trades. Um, I want to just remind you guys, risk management is so important. Excuse me, guys. Risk management is so important because if you lose, in your rules say max 1% a day, that could be -1, -2, -3, -4. Last week, guys, I was -4.6 going into Friday, and then I won 4.2%. So I was down -0.4% for the week. So, but if I add up the last 3 weeks, I'm still up 7.1%. That's wild, right? So I could lose every day of the week, be -5%. That's the max weekly drawdown. The following week, I have 5%. I'm getting a little like, okay, well, I need a win. I could win two back-to-back 2% days and be down -1% in my account. See, the thing is, guys, it's not to lose a lot. It's to lose very little, 1% max, and then make your 1 or 2% a day, 2% to offset those losses. Because there's going to be that day where you win 3, 4%, secure 2%, and let the rest ride. And you may just wait and hold a position for 5%, and if you win 5% on a week and you had two -1% days, you have one 0% day, um, a plus 2% day, you're essentially break even. And then if you have that 5% day, you're just up 5% on the week. So it's about taking those ratios very seriously, guys, and respecting the rules. The market, uh, the market hurts those who get greedy. You get one chance a day if you're putting on that full 1% risk, which at the end of the day, whatever you trade, you have to just trade every just like that, because that's how the ratios work. You can't say I'm going to risk 0.5%, you win 3 trades in a row, and then you say I'm going to go to 1%, and then you lose 2 trades and you're technically a little bit either break even, or a little under. But so it's best just to trade that 1%, get really good at the skill set, and knowing your entry, knowing where your stop losses can be. It's max 50 pips for 2 lots. If you guys do your calculations, you guys can see, well, if I'm wanting to risk 1%, but the move's already 75 pips, from where I want to do my stop loss, I have to put 1.33 lots on, and it's going to mess up the R to R. Um, so with that being said, guys, uh, do good this week. Be just patient with yourself. Be understanding that one trade. I have a job, or if you guys are secure, just you cannot be wanting to make money. You just make money in the markets. You have to actually want to win correctly. 0%, -1%, um, plus 2%. That's 1% right there. 0%, and then a 5% day. That's 6% in 1 week, guys. That's on what? 100K? That's $6,000. So this is Martin Day Trades. Um, like, comment, subscribe. This is the NASDAQ NAS100 weekly market outlook. Subscribe, guys, because it helps the algorithm. Hit the like button, helps the algorithm. And keep posting these weekly market outlooks so that you guys can be more prepared and have an edge over the competition in the market come Monday morning.